get him up here as a speaker.
Yes, let's do this.
Sweet.
Sure,
So,
hey, what's up, Danny? Nice to hear your voice again, brother.
Yeah, long time, sir. Messi, I heard your...
Let me get him invited up here as a speaker.
Yeah, a couple weeks off here for the break. We're kicking off the 2022 season with probably my favorite duo we've had on yet. It's going to be an exciting show, guys. Stick around while we get everything locked in, and we'll kick it off.
Going to be a big week.
Yeah. Yeah.
What was this Bitcoin rug candle, dude? Like, what a rug.
this price action has just been so scammy. You know, it goes up. It's super choppy. But honestly, I wish they would just rip the Band-Aid off. Like, I'm tired of this slow rug. It's just down only, pain only, misery only.
The painful way.
Hopefully it'll end. Yeah, it's a painful way to do it.
Jesus,
for sure.
That wick down was my fill. I didn't even have the order set. I'm such a noob. Oh, well. 2022 is the year of getting organized.
Okay, so I have sent Andre a speaker invite. Hopefully he got that, and we can get him up here. But for everyone else, welcome to Frog Radio. We're actually sponsored by Avalanche. We're not going to do too much Avalanche talk today in respect of Andre and Danny and their new project. But I did want to mention, that they were our sponsors at the beginning of this episode. Honestly, I'm really, really excited to have them here. And just to clear the air, for those of you that don't know, I wanted to talk about something really quick, and I wanted to kind of teach you all a quick lesson, especially because, a lot of markets are down right now. A lot of people probably are feeling some kind of way. We've all heard the meme, right? Can the devs do something? Please, devs, do something. Famously, or maybe not famously, maybe niche Twitter infamously, whatever, a few months ago, I had been drinking and I was angry, because I felt like Andre had put me in a bad position. But it's funny how the whole thing played out. And I don't know if we'll ever be friends or whatever, but I always have had a lot of respect for Andre. And the interesting thing here is that, and the interesting lesson that I was able to learn from this whole experience, and that Andre kind of allowed me to learn. So thank you for that, Andre, is that without these guys that are building and making these things for us to play with, we wouldn't have fucking anything to do. We would just be sitting here watching Bitcoin, do fuck all for the last year. Nobody would have made any money. Nobody would have made, had any fun. And it doesn't matter if you're building, an NFT empire or financial products or whatever, but people do need to understand that it's very difficult to be a builder. And I'm not a builder in the sense that I write code for crypto, but I've built a lot of communities, and people don't even though I'm a mercenary though, right? I get to leave at the top, when I sell my bag, I get to go. These guys that are building, they don't get to leave, so when it's on the way down, and you guys are down on your investments, down on your money, down or whatever, it's very, very important, that you continue to show these builders respect, because if you don't, they're not going to build anything else for you to play with. And Andre, I'm really, really appreciative of you, wanting to be on this episode today and coming on. I'm really excited about getting to speak with you in person for the first time. So welcome.
Thanks, man. I mean, that's setting the stage a little bit like one or two expectations, but all right. Look, likewise, I have to admit, like you said, like building in the space is really hard, and I am a person that puts a lot of emotion into my protocols, so it is very easy to get emotional when you're constantly kind of under attack when things happen. So, it's very easy to kind of turtle away and disappear out of it. So, I mean, I still like in this public setting, I think it's still good to say that, I should not have lashed out to you as I did. You were just there, wrong place, wrong time, or right place, right time, depending on how you want to look at it. Um, what I will say though is I heard a lot of people from how you were training and how you were preparing for the fight, and then I'm very comfortable to say that in my current condition, I do think you would have beat the living crap out of me. So I'm very happy to take that stance.
I don't agree with that, man. I don't agree with that. But I'm glad the whole thing was called off. It was silly. Thank you for being the bigger man and stepping down. And I'm glad we can move forward from that. And I'm very sorry about the whole incident. I've said that on Twitter. I wanted you to hear me say that in person. In retrospect, when I look back at the whole thing, it was so silly. And it's easy to get caught up in this kind of metaverse, right, of crypto Twitter. And it's easy to drink, the Kool-Aid, and especially, when you have so many followers and it's people are liking your tweets and egging you on, and you're already angry. I hadn't even lost money in that contract. That was months and months and months ago. I don't even know why I fixated on that. I think it was because the rest of the market was in a downturn, and then I wanted to started looking for people other than myself to blame, for my portfolio going down. And I think you were just low hanging fruit, easy target. So that was fucked up, of me to even start this whole fucking mess.
Bear market things.
Yeah, look, if your portfolio number is red, there's all sorts of different people you can blame. And, my father was a workaholic. He didn't teach me many things in life other than a really, really good work ethic. And, I got a lot of my brains from him. But one of the most important lessons he ever taught me, because, it's very, very easy to take your finger and point it at everyone else in the world for the things that are going wrong in your life. And sometimes there are external factors, that can't be helped. But many of those times, when you're sitting there, when you're in a rut, when your portfolio is down, there's one person that's to blame, and that's you. You're the one that made that decision. I was the one that aped into an unaudited, untested contract, and why did I do that? It was greed. And I think that lesson can be applied to a lot of these things. People are so eager to make it tomorrow, to make that fast money. There's nothing like that rush of being early in something or being right about something here. So with that being said, it's people just don't realize, and I'm saying this as somebody that's been in this crypto game for 8 years now. I started doing this at the end of December 2013. Now, I didn't have any fucking money for the longest time. I paid my tuition for years. But at the same time, all you have to do here is survive. Getting rich in 5 years and 10 years quick is still getting rich very quick. People are so disconnected with reality here. We're spending $5,000-$10,000 on a JPEG. You don't have to make it tomorrow. Your main focus, and this is to anybody, and I promise you, if you just keep your head down, learn as much as you can, get as involved as you can. I'd advise everyone to be a builder in their own right. Ask these devs, rather than bitching at them and blaming them, ask them what you can do to help. A lot of them need your help. Maybe you can help manage the community. Maybe you can help with the web page. There's tons of things that you can do to help out, and you can work for your bags. You can grow your own investments. You can put in that work just like they are. All you need to do, though, is figure out a way to survive. And that's really it. If you can just survive long enough, the odds of you, hitting a lotto or home run play or eventually doing well are exponentially higher.
And that's really what we're here doing on Frog Radio. And that's what Crypto Messiah and I got together last year. And we said, look, let's put together a podcast, host it on Twitter Spaces, where we can invite builders, innovators, users, and otherwise, savvy individuals that are involved in DeFi, so that we can help empower people to make their own choices, make educated decisions, and get past just buying and selling tokens on an exchange where they say, oh, I'm investing in DeFi. It's no, get your feet wet, get your hands dirty. But move slowly, move safely, and understand that everything comes with risk and everything comes with reward. And through empowerment and education, we'd like to get everyone in a position where they can make those decisions for themselves So at the end of the day, win or lose, they can point in the mirror and say, you did this, you're responsible for this. And that's what it's all about, right? Being your own bank really is about putting you in the driver's seat. So you can get those yields, those interest rates that banks have been historically hoarding for themselves, so that you can borrow at a rate that doesn't put you underwater for 25 years just to be a student, or you can get paid to own your house. And so these are all the exciting tools we've got. We've got Andre, we've got Danny on today, kicking off the 2022 season. Couldn't be more excited. Let's get started. Frog Radio, guys, so good to have you.
All right, so I think, and I'm just going to describe our format very briefly for any new listeners. We've got almost 4,400 frogs here in the audience. What we're going to do, and I understand RT and I have done a lot of introduction and kind of preface on this episode as our first episode to 2022. But for any new listeners, what we're going to do is we're going to speak with Andre and Danny for a while. And then after that, we actually open the floor up to questions, and we'll talk a little bit more about that later. But for now, Andre, for those of you that don't know him, absolute legend. He is like DeFi summer. He was the king, right? Anything Andre did, everybody was trying to find out what he was working on next. Everybody was trying to get in his next project, and for good reason too. So Andre, we've already spoken with Danny at length. Why don't you take a little bit of time to tell these frogs about yourself and, what you're passionate about, who you are, what you do, what projects you've built. Take it away, man.
Yeah.
Andre, you're.
Yeah.
Oh yeah,
No,
there you go. We can hear you. Yeah, go ahead.
I'm apparently very technologically inept today. I'm trying your microphones and headsets and stuff, and nothing is working. So whenever you think a dev knows what they're doing, just remember they never know what they're doing. Never assume they know what they're doing, and please never think that it is safe. I am living proof of that. But anyway, that's a different story. Intros are hard, man. Like I'm a dev. I like building stuff. I like prototyping. I like experimenting. Some people call it innovating. I'm not so sure about that. I think it's a lot more, let's see what breaks, and if it doesn't, cool, it worked. And if it does break, well, shit, better try something else. There's I think it happens in most industries, where people latch onto, I don't know, builders, known entities. I don't know what it is. I mean, Messi, I've been following you for a while now as well. I'm sorry, I don't know what the appropriate moniker is, if it's Messiah or whatever, but I've just always been mentally calling you Messi.
Yeah, Messi. Honestly, dude, I hate this. I hate this tag. I did it in my early 20s. If I could be somebody else, I would. But I tried to rebrand, and I'm just kind of stuck with it. So Messi is just fine. Thanks.
Oh yeah, but I mean, like it was very different 2 years, 3 years, 4 years, 5 years. Whenever you get into the space, it was so much smaller. It was so much more isolated. Like there was less people, there was less noise, and a big thing for me, there was less consequence. Because I had a lot more freedom to experiment, 3-4 years ago when I got into this, when no one cared, versus doing something now is so much weight that it's actually a little bit crushing. Anyway, so long story short, I got into this space because I really like building, but I despised DevOps. So for those of you that don't know, DevOps is like running server infrastructure or things. Like you might have a cron job sitting somewhere that needs to run a script and do something in the background. Now, my problem was when it came to DevOps is actually a very sensitive thing. If you log too much, you will run out of disk space, or if you have too much calculation, you'll run out of memory, or you'll have CPU overheads, or the region you're in goes down, and then there needs to be a fallback. And I was utterly bad at it. So a lot of my stuff kept breaking when I was still sort of in the mix of fintech / traditional finance, just because I was so bad at DevOps. And when I really got involved with Ethereum, the first thing that snapped for me was other people do all the DevOps for me. Like nodes running the Ethereum, Go Ethereum, whatever client they're running, they need to make sure it has uptime. They need to make sure it's executing correctly. They need to make sure there's enough disk space. So all of a sudden, this one core thing that I hated about my industry, which was DevOps, is removed, and I can just focus on the pure R&D building, and that's really what drew me here, and that's the thing that kept me going. It's also the thing that's gotten me into a lot of trouble, but that's different anecdote stories that we can dig into if and when required. But yeah, I mean, just a dev, like I don't like, when people think there's more or it's a bigger moniker, or I mean, everything I've built has been accidental. I don't know if the audience knows, but I'll go through some of them, like Yearn, right? Yearn Finance. I started building because I just kind of got into DeFi. We just had Uniswap, Compound, DYDX, Fulcrum, a bunch of stuff you haven't even heard of anymore. And they were all offering interest rates for lending your ETH or your stable coins or whatever. And every day, sort of as a hobby, I would check all of these different systems. I would check their different APYs and APRs, and I'd see where the highest rates are, and I would move my stablecoins. Now, also for the record, back then, moving between a protocol cost like a few cents. It's not exactly what it was today, so it was also a very different environment to play in. But then one of the things I started thinking is, instead of me needing to manually monitor all of this and move it on a daily basis, why don't I script it? And that was actually the first time I started learning Solidity, and that's the first time I even got into Solidity. And then I learned most of the Solidity I know today by looking at other protocols and how they do these things. And I scripted a little few files that just, would check on-chain APRs and then move between the different protocols. But I still had to, at least once a day, interact with the contract, because the one thing about Ethereum and any EVM-based system is, how to describe it? It's stateless unless interacted with from an external force. So what that means is nothing inside of Ethereum itself can cause its state to change. An external trigger has to come from the outside and do something. Now that's commonly, all of us doing transactions on the network. As soon as you do a transaction, that causes a state transition. So now I needed to interact with this thing on a daily basis. And even that, I realized, was a little bit annoying. And that made me start to think, but what if I open this up? What if I let anyone deposit into this thing, and every time they deposit or withdraw, it checks what's the best rate, and then it moves it between this. And then I launched what was iEarn back then, which later became Yearn, or YEarn as it is today. And the whole principle there, it's such a simple concept. It's just, hey, if we all do this together, we will get higher interest rates, because whenever we all interact, it optimizes it. And I mean, that was the whole concept. It's really that simple. And then, Keeper was kind of the next thing. And even if you look at that was because now with Yearn, as Yearn evolved and it got more complex, and especially kind of with the rise of yield farming, all of a sudden interest wasn't that as simplistic of a calculation anymore, because now interest rate calcs wasn't just, I am receiving borrowing rates for depositing my ETH. Now all of a sudden it's, okay, but I'm earning comp from Compound, or I'm earning curve from Curve. So now I have to start taking that into calculation. So that started making it more complex. And luckily that's when other developers also got involved, which was fantastic. And they're really doing all of the heavy lifting nowadays, and even back then. But the main thing was, now we have tokens. And again, like I said, you need an external actor to do something with that. But now the problem with something like a token, you want to swap that to the underlying asset. So let's say I deposited USDC, that USDC is now in Curve, and now it's earning CRV token. So now that depositor would like to compound the CRV token into the USDC. Sorry, Danny, I apologize. I need to never refer to anything other than mem. My sincerest apologies there. So okay, sorry, mem. So now you want to compound Curve on your mem. But now this isn't something you can do whenever someone interacts with the protocol, because the problem with this is, what you can do is you can do some very interesting flash loan attacks where You flash loan a lot of liquidity. You increase the side that you want to take the asset out of to some insane ratio. And then when the curve is traded for the underlying, so when curve is swapped to MIM, now all of a sudden you get a fraction of the amount you would have received. So let's say you would have normally received 1,000 MIM. Now you're only going to receive 0.1 MIM because the imbalance in the pool was created. So now all of a sudden we couldn't have anyone execute these things. So originally when it started, we had authorized keepers who were allowed to do it, but not a very decentralized approach. And eventually that's going to lead to attacks. And as I also mentioned, I hate DevOps. So, I don't want to run off-chain scripts that is monitoring these things and then executing these transactions. And that originated Keeper, which was simplistic as an idea of, if you look at Ethereum, right? People often talk about the dark forest, and it's real, it's there. And there are these unknown entities that do arbitrage on AMMs or liquidate on lenders or any number of exotic actions. As long as they're making profit, they do it. So the whole concept with Keeper was, hey, as long as someone's doing one of these jobs that we want them to do, whether it be liquidation, whether it be a harvest, whether it be compounding of interest or fees, doesn't really matter what it is. But as long as we appropriately incentivize them, they will come do it for us.
Did we lose Andre there?
He's yeah, I think he went out.
Looks like he cut. I see him there.
And yeah, he's there. And for those of you that don't know, we've all heard of the valueless governance token, right? Guess who the originator of that is? It's Andre. So pretty cool history lesson, for those of you that weren't around for the 2020 DeFi summer season. Still remains probably my favorite trading period of my entire life. When we were watching scanners, blockchain scanners that would tell us when new things were listed. And anything that listed on Uniswap, I remember, was going 5-10x. We were making money
I think it all crashed, to be honest. I think nobody can hear us. There was too many frogs. Yeah, I think so.
Hold on, let me see. It says
did we just break Twitter Spaces?
Yeah.
6,300 guests. Hold on. I've invited Andre back up to speak. Okay. Danny, what makes you think it's all crashed?
I don't know. I don't see any. Can people interact?
Please, hey guys, if you can hear us, can you give us some emojis and shit?
Yeah, exactly.
Yeah. Look at the audience. So we're getting some 100s and thumbs ups and that kind of stuff.
All right.
But yeah, okay. So we're gonna wait for Andre to get back up here. I was really enjoying what he was talking about. But DeFi summer, I still remember there was one coin that kind of just marked how crazy it got, and that was anti-ample retard tendies. And it's kind of funny. It was almost really similar to what you see going on in the NFT space right now, where you have one more blue chip project and then you have all of these derivatives that are emerging out of that, and then derivatives based on those derivatives. And the further it goes, just the crazier everything gets. But I still remember anti-ample retard tendies very well. And I think people made 5-10x on that almost immediately, which is pretty hilarious. Andre is being invited back up. He is connecting right now, so give him just a second. And there you go, Andre. I think you left off, and the last thing we heard from you was when you were speaking about how you created KP3R or Keeper to kind of incentivize people, these keepers in the dark forest, to carry out actions. I've heard it described as cron jobs for DeFi. Is that a correct description?
Yeah and nay. It's they're not necessarily time based. And for the record, that one was not my own technological ineptitude. The whole app crashed, so I'm accepting zero fault there. It's event based. So there's some kind of trigger. It can be time. You can very easily say, hey, run this every minute. Blockchains aren't super time sensitive though, because like if we look at something like Ethereum, you have a block every 13 odd seconds. So you don't really want to do things because that's a very easy way to start messing up. So you'd rather want to do, like an example, obviously liquidations. They're an easy example. When this account is ready for liquidation, liquidate it. Another one is harvests. When there is more than $10,000 worth to harvest, harvest it. But time sensitivity is another thing. Maybe once a day you want to do something, then you can also execute that. So it's not just specifically for time-based solutions. It's really so we made it agnostic to the point where keepers themselves, which are these unknown entities who run these DevOps infrastructures or bots or whatever you want to call them, all they have to do is call work. And the builders themselves normally create what needs to happen when they call work. So what mostly happens is even companies that do their own liquidations. So they'll create a script that says work, and there's normally a view that says can work. And then all that happens is the keepers themselves will monitor can work. When can work becomes true, they'll execute it. They'll call work, and often they don't even know what work does. They just know when they call work, they get back more ETH than what they spend on gas, so they have profit. And work can be anything. Work can be a liquidation that then creates profit for the protocol itself. It can be a harvest that creates fees that compounds. Those are honestly the two primary mechanisms, but we've seen oracles get created with that. I've tried to do a few more esoteric stuff, but most of them haven't really taken off. But again, a very simplistic concept. It was just, hey, I want other people to do this work for me. So one thing that I think people often underestimate in this space is the power that we have in terms of coordination. And that's something where I really like DAOs. Now, as entities, I hate DAOs. Don't get me wrong. Like, I'm not a fan of them. I think as soon as you try and make a business out of a DAO, it fails horribly. But if you use them for a singular purpose, so I think of them as these singular vehicles, where a good example was the Constitution DAO, like when the people thing. When they came together, they had a singular purpose. They wanted to collect funds to buy the Constitution. And it was beautiful. It was fantastically orchestrated. It was beautifully coordinated. They raised so much money. But after that thing, they kind of started falling apart and they didn't really know what they were supposed to do or where they're supposed to go. And we saw the same thing in the DAOs we created. If you look at Yearn started as hey, everyone has a say. And very quickly we realized everyone shouldn't have a say. And then, there was an executive committee elected, and from that there was like a dev committee, and there was a strategist committee, and it ended up becoming so convoluted that there's now so many committees. I don't even know what the hell's going on there anymore, or who's actually making what choices. But it has to, because eventually you follow that same corporate governance structure. Anyway, back to the original point. You have to have these once-off things that happen, and in crypto. It's not just blockchain, crypto Twitter, or rather Twitter itself and Discord also allows us to do this. I mean, another fascinating thing is the Solidly, the new thing that me and Daniel are working on is it hasn't even launched yet. I mean, obviously the code is out there and the testnets are out there and people can interact with it, which is also a few lessons I learned. Don't do everything in prod. That's a little bit insane. Don't do what I do. I don't know what I'm doing, but anyway. And the what's it called? VEDAO, the thing that launched last night. Now, again, this is not an endorsement of them. I have.
Uh-oh. Technical difficulties. It sounds like his app is having some trouble today, maybe on an Android phone or trying to run on PC.
Yeah, he's got to be an Android guy. That's
just getting into the juice here too, as Danny's name came up. Danny, sounds like he'll probably be a couple minutes. Why don't you maybe take over from where he was?
Take over from where he was leaving. So what they wanted to say is that, like, the example of Twitter is that even if a project is not yet launched, like for example Solid, then still other builders still come forward, and I let you continue, sir. And they can organize. You're such an Android guy, dude.
Look, I pegged you as an Android guy the second I heard you speak. I was an Android user my entire life, and primarily just because I love to mod my operating systems, overclock my phone, do something a little bit different. It's just fun. It was just a hobby. But I got a car that had Apple CarPlay, and my wife is just the biggest everything. It annoys the crap out of me. I'm the biggest hater ever. But she talked me, and I don't know how she did it. She talked me into getting an iPhone, and I hate to say it's just a better phone. It just is, in the sense that it is really good at doing what it does, and that's letting me browse Twitter, letting me be on the internet, and making phone calls and sending text messages. It's just so nice. But anyway, Andre, you were talking about this VE DAO, and I think it would be important too to talk a little bit about the new technology you've built and why you built it. Of course, the VE model is all the hype right now. Maybe you could tell people what the VE model is and the goal of the VE model. And then also, I guess we could talk about Nash equilibrium a little bit. This 3-3, I remember, everybody went crazy. Was it last week or the week before when you tweeted something about VE 3-3? They were like, what are these guys up to?
Yeah, happy to. So VE vested escrow was originally designed by Mitch Will from Curve Finance. Sorry for the shorthand. The concept there is really simplistic. Is he wanted to split the people who have liquid incentives, aka Curve as a trading token, and those didn't necessarily. I don't want to use the word deserve, but they didn't. They shouldn't have as much weight as the people who are more long-term committed to the protocol. And now if you start looking at it from a DAO perspective, because Curve is a pure on-chain DAO, it's beautiful in its design. All of the votes have to happen on-chain. New Gorgias have to be added on-chain. New rewards have to be added on-chain. So all of those things have to happen on-chain. So now from that perspective, he couldn't really have liquid Curve have the same amount of weight, because what can easily happen then is someone can flash loan a massive amount of Curve, they can enact a vote or enact a reward system, or even do things like drain the community fund, these kinds of things, and that's very, very dangerous. So how do you negate that? You have to give different weights to different people. But now this is a Sybil free environment. You don't know who the people are, you don't know what they're doing, you don't know. There's no credibility behind an Ethereum address. And even if you were to attach credibility behind an Ethereum address, you will eventually have a secondary market where people sell that credibility, and that's used for exploits. So he came up with this idea, look, let's give benefit to the people who are willing to vest or invest, depending on which way you want to look at it, in the long-term success of this protocol. So he created vested escrow, which is VE. And that created VE Curve. Now, how that works is it's basically a decaying ratio from 4 years. So if you lock up your tokens for the maximum amount, which is 4 years, then one Curve is equal to one VE Curve. So that's what he wants. He wants people who are vested into the protocol for the next 4 years. If you only lock up for the next 2 years, then one Curve is equal to half a Curve. So you'll get 0.5 VE Curve, all the way down to 1 week, in which case it's a small weighted amount. But now this way, if I do a massive flash loan, which I can't do because I have to lock it up, but let's say I convinced some large Curve whale to loan me a lot of Curve, and I have to pay it back at some ridiculous interest rate, I'm not going to lock it up for 4 years. I might lock it up for a week. But even if I lock it up for a week, the decaying rate is so small that the weight is tiny. Now, so that was the reasoning behind the model, but obviously what ended up happening is a whole ecosystem, behind that, because on top of that, now VE Curve had a lot of weight, because VE Curve is the thing that decided which pools got whitelisted, which protocols got whitelisted, who got Curve rewards, and all of these different things. So that started creating a bribe environment. So now what people started doing is let's say I launch a new token, let's say I launch a new algorithmic stablecoin, right? And now I want as much liquidity against MIM as I can possibly get, because the better my peg, the more belief there is in that I can hold this peg, and the better the protocol is. And while Curve is a stable swap mechanism, so it's really good at trading assets that are closely correlated, it's also a very good pegging mechanism. So what that ends up meaning is, like if I were to put it in Uniswap, it gravitates away from 1 equals to 1 a lot faster than if I put it in Curve. It's going to hold that 1 equals to 1 peg a lot longer. So especially algorithmic projects or new projects, or any new project that has to prove, hey, my stablecoin can keep peg, whether it's a SDETH for staked Ethereum, or whether it's a new collateral backed coin or an algorithmic coin, doesn't matter. You need public belief to be convinced that this thing is going to keep peg. And Curve pools are very good at keeping peg for you. So the one thing is obviously getting your stuff into a Curve pool. Now, that in itself, back then, it did actually require the Curve team to do it manually, but then they ended up releasing factories, which is nice. Now anyone can deploy it. But even if you deploy it, you're not going to attract a lot of liquidity. Now, a reason why a lot of the pools have as much liquidity as they do is because they earn Curve incentives. If you are an LP, a liquidity provider to one of these pools, you get the Curve token, which is fantastic. And you can lock that up for more VE Curve, which boosts your rewards even more. And there's a whole little meta game there as well that's quite fun to play. But so you want those Curve incentives basically along with your own incentives. But to get that, the people who currently have VE Curve have to vote for your pool to get rewards. Now, at the start, that was difficult, because one, you didn't know who these VE Curve whales were, you didn't know who to talk to, you didn't know who to convince. So it stagnated for a while until bribes started getting into the play. Because now all of a sudden, hey, I can offer 1% of my circulating supply to make sure that these VE Curve whales vote on the pool, and made things a lot easier. Now I just throw my tokens into the contract. If they vote, they get to claim it. If the pool gets approved, they get their reward. If it doesn't get approved, they don't get the reward. Things like that. And from there, okay, so that was sort of the one meta game, which is obviously one big thing. And this is all just happening because of this concept of VE Curve, by the way. So even though the original goal was just this, time-weighted prevention system, bribes came into existence of it. But now another part of VE Curve, which was really smart, again, on Mitch's part, the dude is a literal genius, was that the amount of Curve you earn if you are a liquidity provider into one of these pools is, if you have no VE Curve, then it acts as if you only provided 40% of your actual liquidity. So if I provide 100 liquidity tokens, its calculation starts at 40. But now, if I have the max amount of VE Curve, now it's a little bit more complicated calculation, because it actually takes into consideration the amount of liquidity into the pool as well. But to keep it simple, you need X amount of VE Curve, and if you have enough VE Curve, then it gets boosted from that 40% to 100%. Now, on Curve US and things, that's normally referred to as the 2.5 boost, which is the maximum amount of reward you can get, but it actually just treats your liquidity like it's 100%. But so basically, to maximize your Curve rewards, you had to have a sufficient amount of VE Curve. Now, for a lot of people, this was a difficult thing to do because you have to lock these tokens up for 4 years. Now, as much as we're all in this industry, I mean, most of these technologies haven't even existed for 4 years, other than basically BTC and ETH. So taking that kind of a long-term risk on something fairly new is really difficult to do. You don't know, will the team still be around? Will they have become so rich that they just, bought some island in the Caribbean? They're never going to talk about blockchain again. Like there's a lot of unknowns. So it was a high risk cost opportunity for a lot of people to actually put money into VE Curve, because you're taking a very long opportunity cost on your capital, which even if you have conviction in the Curve protocol, opportunity cost in this space is still a massive thing. And at that time, Convex came into the ecosystem. Now, well, technically, Yearn already had YVE Curve back then, but it was a very different model. So I want to talk about Convex specifically, because what Convex did is Convex said, look,
Got him again. Danny, what did Convex do?
I'm the replacement of Mr. Cronje.
I feel bad. I'm like, we got to get Danny in here. We're going to break it up because Andre's dropping so much heat, but I miss your voice, man. Maybe fill us in. Let's, he can come in and kind of play off what you're saying. What do you got?
Yeah, so Convex came in and said the following. So I'm going to issue a new token, and I'm going to give this token to everyone that comes to our platform and farms certain pool, like, for example, 3 pool in this example. That was the first one, the most important one. And we are going to give you this token. In exchange, we're going to keep some CRV that we're going to lock, and we're going to help boosting such position. So we can actually help you farm more money. So 100% of your liquidity is earning the CRVs. And in exchange, we are locking new tokens and helping basically the liquidity of the value that is locked as BCRVs. So I think it's quite a simple protocol, but it's very cool, right? And this is actually very much heat right now, right? Like everybody talks about
Curve
CVX.
Wars. Yeah, the idea of Curve Wars heating up, and then now I'm hearing, this is the CVX of CVX. It's going to lock up CVX, and all these iterations are coming along, and now it's like this is going to be the CVX of this protocol and Phantom and all that. So it is a very hot thing, and as that is with open source, you're going to see copycats and people trying to recreate and improve, and that's the beauty of it. I think we got Andre back in here, Messi, if you want to see if you can invite him back up. I don't know about you guys, but I, for one, have used Curve. I've been messing around with Curve. I've heard of all these things. I've tried to read up on it. And for all the memes about, Andre writes a piece on Medium and everyone gets more confused after they read it. I think after he explained that to me, I'm finally understanding it. So I really appreciate that explanation, Andre, and kind of walking us through that. And I imagine that is leading up to the big unveil that is coming this month, which is the idea of this V33 that you published recently. And so without further ado, you're back. Welcome.
Yeah, okay. So just anecdotally speaking, as often as this stuff is breaking while I'm trying to talk here, this is how often my smart contracts break. Never put money in them. Never, no matter what you do.
It's a role-playing effort here.
I don't know what's going on. Like, I've changed networks. I've killed everything on this phone. I don't know. But anyway, I'm just going to keep trying at it. I was saying something about Convex. Convex came in. They had this idea of, look, you as a individual probably don't have enough curve to boost your own position to 100%. So instead, we as a protocol are going to start collecting enough curve to boost your position to 100%. And they did that by essentially selling Convex token for curve. So you give them curve, you get CVX. They have their own CVX curve later on as well that they got, and that gets extra rewards. And as you stake it, you get more rewards. And it's a very elegant system. I'm very impressed with what they built. But the concept was basically, let's what's the word I'm looking for? Let's combine a bunch of little people's curve into one massive curve pot, and then everyone can get boosts. And I don't have pure data on this, but just anecdotally from what I've seen from people staking via Convex versus people staking directly via Curve, most LPs have moved over to Convex instead of directly with Curve. So there's a lot of sort of abandoned VE curve at this point that unlocks whenever it unlocks. And then on top of now as Convex kind of ended up almost monopolizing all of the curve supply available because they had a beautiful tokenomic model, and it was, again, very elegantly designed. But it got to a point where they had the majority of curve, more so than any of the founders, any of the team, any of the core members, anything like that. So now all of a sudden, to get your pool whitelisted or to get rewards or to have something enacted, you had to go through Convex. So, and now another interesting thing happened is after a while, Convex introduced voting, which they did off chain, which is very useful for on chain voters, not decentralized, but that's a different topic. It's very user friendly, which is a good thing. I do think we focus a little bit too much on decentralization in this space sometimes. Sometimes a product desires UX more so than decentralization, but again, that's a different topic. So now you vote. So now you have two choices, right? You can either use your VE curve to vote what kind of distribution of the curve token goes as rewards onto a given pool, or you can use a convex token. Now, one convex token represents, I'm not sure what the current numbers is, but last time I looked, one convex token represented between about 8 to 9 curve tokens. So you can either have one curve voting power, or you can have one CVX and have 9 times the amount of voting power. So this started. Now again, remember, right? And I'm jumping a little bit all over the place, but now remember, more or less at the beginning, I said that Curve is very useful for new protocols that have tokens that need to keep peg. So this is true for protocols like Badger. This is true for protocols like Frax. This is true for protocols like Abracadabra. Even older protocols, Maker, Dai. Even traditional stable coins, it's very valuable for all of these guys to have high emissions on their pools. And the way now all of a sudden, so previously they had to get a lot of curve and lock that up into VE curve for 4 years, which is a massive capital expenditure, and it's very risky for a lot of these protocols when they don't have that much cash to work with. But now they could start accumulating CVX token. And the CVX token only has if I'm not mistaken, a 16-week lock, which is a lot less of a opportunity cost, capital cost when you need to participate in this little meta game that's happening now. And so we started seeing a lot of these protocols accumulating a lot of CVX so that they can start manipulating, manipulating, I'm going to stick with that word, these vote incentives onto these different pools, because the higher the incentives, the more liquidity, the better peg, and also the better public belief, and also the bigger trades people can do. So there's all of these little meta games that have developed into this ecosystem. And now I'm not even talking about stuff like Votium, which was built on top of that to create the bribe system for CVX holders instead of VE curve holders. There's Redacted Butterfly, which is also now accumulating CVX with their own model to also help these voting things. I saw they released something new today. I haven't looked at that yet. And so many other games that's sort of evolving on top of this. But a main premise, and this is a big sort of motivation behind our new design, which is sort of called VE33, but the protocol is Solidly or SolidSwap. The motivation there was the realization that all of a sudden these games aren't really for users anymore. They're for protocols. They're for protocols that would like to keep peg. They're for protocols that want deep liquidity. They're for protocols that want to incentivize their own token with something that they believe has a better chance of surviving the markets necessarily than themselves emitting the token on their own pools or whatever the logic can be. But we started seeing more and more protocols absorbing this stuff. Now I'm just going to pause here because I just want to ask for feedback because I haven't done these before. Should I segment kind of into why we've done a lot of our design choices, or you want me to stick on Convex, or where do you want this to be on?
Oh, I mean, I think most people are probably here to hear you guys talk about the new Frog Nation product, but all of this like background and introduction to that segment is I think it's perfect. Just because it's funny, like so few people, we've heard about the curve wars all over Twitter for months and months and months, ad infinitum. And now we're kind of hearing about the convex wars, who's going to control all the convex, because, right, you don't need to control curve anymore. That the curve war is kind of won. Convex won. They've monopolized it, as you've said. So I think we can, kind of use these insights and start talking more about the VE33 design, and then SolidSwap itself, what it's going to be, and also who it's going to be for, whatever.
Okay, that works. So going on to sort of naturally evolving from the VE model. Um, let's now the cool thing is if you just look at VE, right? So quickly ignore curves, stable swaps for a second. Just assume there's a protocol that is capable of generating revenue. You can attach VE on top of any protocol because one, it allows your long-term holders to receive voting power, which is great. It allows your long-term holders to receive fees, which obviously is also great. Apologies. And if it's an emission-based protocol, it allows your long-term holders to be able to direct where that emission goes onto, and this is true for all protocols. Like if we look at SushiSwap, a big reason why they also had good success with TVA and all these things is because they're an emission based protocol. They give incentives when you provide liquidity onto those pairs. The one thing where it starts being a little bit misaligned is those incentives are for liquidity. They're not necessarily for the fees you're capturing. So if you look at Curve, it's capturing trading fees, which you can argue is a net function of liquidity. The higher the liquidity, the lower the slippage. The lower the slippage, the more aggregators will route through your pool, which means the higher the fees. But it doesn't actively promote the fees themselves. It indirectly promotes it. If you look at SushiSwap, the Sushi emission isn't necessarily on the most traded pairs. It's a little bit team decide based on how much the emission goes out. So there's also not really ex Sushi voting control that's happening there. I'm trying to think. Aave, they've got their adjustments in terms of where their liquidity incentives goes on top of which protocols you're borrowing. But that's also a little bit abstractly team decided. It's not based on you voting or redirecting anything. So again, there's no feedback loop. So VE is already a great solution because VE is a good feedback loop. If you attach VE now to Aave, it also works because what ends up happening is, let's say I'm a big depositor of, I don't know, MIM, and I put MIM in the protocol, and now I'm also a big VE Aave holder. So now I redirect those fees onto the borrowing rate for MIM. And now as the borrowing rate goes up, because there's now more incentive to borrow, because there are now more fees, it means there are more depositors because the interest rate for depositors also go up. So now there's more TVL as well. More TVL means the fees just went down, which means more people borrow fees. So now by emitting these emissions, I'm increasing the fees of the protocol by that VE decision I made. So no matter the protocol, you can attach it to it. So kind of like at its highest level and sort of where the conversation started was just looking at, hey, what if we take a SushiSwap, a Uniswap, whatever you want to call it, a standard traditional AMM, and we attach this VE model? Because now all of a sudden, people can use this VE token to vote on where the emission should go to. That emission rewards pools with higher fee percentage. That fee percentage goes to the VE holders. So the more they're diluting via voting for emission, the higher fees they're getting. So it works on any protocol, and it's a very elegant solution to work. But
Paging Danny.
Yeah.
Looks like he crashed
But
again.
the problem of this design, and when we was talking with Andrea about it, is that are we really, as token holders, rewarding the growth of such protocol? Are we actually allocating the resources that we have, so the missions that sooner or later will finish, so to the correct revenue generating pairs, right? So if you look at what is actually trading on Sushi, for example, and this connects with the Frog Nation, that is there is a vote right now for confirming the Frog Nation to basically come to sushi and become and restructure the management and so on. The idea is the sushi issued and given to LP pairs actually given to the correct pairs that are generating revenue for X sushi holders, right? Are the emissions of Curve actually given to the pairs that are creating value to the protocol and generating fees? This is a big question to answer, right? And does the token economics of the V token actually helps on redirecting these rewards to the correct pairs, right? So if you look at the volume is basically what you want to see, because the more volume, the more fees, the more you have a pair that has liquidity that is in high demand. So at the moment, the feedback loop or what is happening in the curve wars or convex wars or whatever, we are rewarding TVL exclusively. This is what Andre was coming up to. So we are rewarding growth of TVL and the farmers rather than actually the users that might not need certain pairs so much and so on. And there is like a growth phase that I would argue that is important, and you still need and want the bribe system. You still want people to be able to kick off their own new pairs and new projects and whatever, new stable coins or any sort of things. But at the same time, you want to allow them to do it, but also they need to prove that they are sustainable. They actually create a demand. And the protocol needs to give to who creates demand and generates fees and generates value to the people that lock, or to the people that are distributing such reward. Because at the end of the day, right now, we are looking at a lot of like short-term thinking when we want to start to enforce more long-term sustainability. So the more we become sustainable, the more we redirect rewards towards pools that are actually valuable for the users, the more we grow DeFi. Because it's the user ultimately that has to be the focus for everyone, for every product. And the user, yes, in certain cases is a liquidity provider, but not necessarily. Like you need to balance the two aspects of what you're going to do with the rewards that you're giving out to these pools. And the model of the V33 wants to reward the token holders, wants to make sure that the rewards are redirected where they are needed. So where the liquidity needs to grow is because there is demand. And because of this, we get more fees and all the feedback, like the round, the circle closes, right? And this becomes a circle of sustainability, becomes something that looks forward to the future rather than the present or the past. And
so, Danny, are you basically describing like a new self-iterative flywheel design to where when people are actually incentivized to vote in a way that accrues more value, right, to the VE token, to the people that have locked, it makes that token more valuable, which then increases the yield of the protocol, which will create more fees, which will create more value for the token. It sounds like you guys have designed a new flywheel, and that's something that's been kind of a hot topic on Twitter for the last couple of months. DeFi is really interesting, and I primarily stick in the DeFi sector. It's most times like 100% because of this. It really does feel like that these tokens appreciate alongside actual growth, actual value accrual. So what are your thoughts on that?
Yeah, so like the biggest problem is like as you know, like both me and you and many of the listeners are actually VCRV lockers. I am myself, like without even convex. Wonderland DAO is one of the largest CVX holders, so it's not that we are saying that everything is bad. Like, don't get me wrong, right? But it sometimes take a little bit of leap to build something completely new. But just by designing the token economics, in the case of SolidSwap, it's not enough, right? You need to prove that the system works inside of an environment. So in this case, an AMM, and that is sustainable long term. And this was kind of the idea that it comes here. Like, you need to, like, everything on paper is good. Like, oh wow, yeah, it's gonna be fucking awesome. We solved all the problems of a lifetime, you know, like everything is gonna be much better. But if you don't like throw it out there, and this is what I really love about Andre, and I'm really looking forward for all the things that we are gonna do together, is that he's like me, not afraid of just go out and just breaks and shatter things and like let's go, like let's try it out. And it's not gonna be perfect. Nothing is gonna be perfect. Like BCRV was perfect till it was not perfect, you know, like till it become convex, like, and it's totally fine. Like, I'm not saying that it's not good, but if we want to keep innovate the space, we need to try new things, right? And stable swaps is something that is in high demand, especially for chains like Phantom, which do not receive, in my opinion, because of the of all these convex wars and all of this that is happening, they don't receive enough incentives to move the liquidity into Phantom. So we said, like, okay, so how do we do something better that really helps the ecosystem of Phantom, that really helps the Frog Nation to have something on the new chains, and what can we do that really is sustainable, and how can we improve this V model, token model? And how do we actually, like, another topic was like, how do we actually launch it in a fair way? Because every idea was a little bit difficult, because we are very lucky that between like all the projects that we have launched right now in the Frog Nation is really self-sufficient. Like, it doesn't require to raise capital, it doesn't require to do ICOs or anything. We're just here to build things that in the ecosystem work together. And yeah, here it comes SolidSwap, and and I think Andre, you have more to say about the very specific design decisions on V33 and SolidSwap and how it works. But I think I send like the message of why, which was important to send, right?
Yeah, really nice breakdown on what you guys are building over there. And I think, one thing that I know is standing out in my mind that I see a lot of talk on Twitter and in social circles is around the distribution of this new token, this idea that, maybe a little angst on the part of Frog Nation saying, how is this going to be distributed? I want to have fair access to it. Could you maybe talk, either one of you, a little bit to the decision you landed on and how that's going to look?
Yeah. So I'm not going to give too much alpha around here. Sirs, if you're here to gonna get the half of how you're gonna get the tokens, I'm sorry, it's not gonna happen so much. But as Andre has posted already, we're gonna take a snapshot of the top TVL projects on Phantom, but that doesn't say how the token is gonna be distributed regarding of TVL. If it's going to be like TVL based or just project based or mix in between. But what is important to know, and I think is one of the coolest part of this design, is that we are going to distribute this token to top 20 projects, but it's going to be locked, right? So everybody will have, all these projects will have the time to decide where to allocate the rewards to starting the week after. So it's just like the first vote, the first thing. And these tokens can't be sold because they're locked, and they will unlock slowly. But the part that is even more interesting, and they got front run by Paint, or however it's called, the protocol, is that these tokens and all positions that are locked can be encapsulated into a non-fungible token. So an NFT that represents such voting power. So this is really something completely new that I think, Andre, you can say something about. It's just super fucking cool.
Well, so thanks, Danny. And yeah, I'm back. Let's see how long this time lasts. A big thing, and me and Danny went back and forth a lot on this, and we ended up including a lot of other founders and things to talk as well. Is like the initial distribution is actually a real problem because once a few people have the solid token and they have a few locks, they can direct where the emission goes. They can decide what pool it is, whether it's spell mum or mum UST. It doesn't matter if it's volatile or a stable pair that's handled within the AMM, but once the emissions are flowing, then it starts making it very easy for the distribution to kind of continue. So initial distribution is where the problem comes in. Now, normally projects don't really have a problem with initial distribution because they'll do a seed round, a private sale, an auction, whatever it is. And of the lot, the one we thought is the fairest is kind of doing an auction model over, like an LBP or something over X amount of time, because that at least gives enough people chance to participate. But we don't want to raise money. Raising money just adds a lot of complications, a lot of flags, a lot of red things that, like from an experimenting point of view, it's just not worth it to risk it. So that option was out. Option number 2 is we just add liquidity into a pool and people can just, buy from there. Now that it's not really fair because it depends on who's awake at that time, who happens to see the pool, who happens to be able to, snipe the liquidity as soon as it's added. There's a bunch of complications there that mean it's not really fair access to everyone. The sort of third option there is we decide. We can sort of allocate ourselves the initial voting power, and then we decide which pools it go onto. But that again creates quite a bit of favoritism, which we also didn't like, and it also means that the decision is in our hand. And personally, from having experience in this space, no matter the decision, someone's going to be unhappy with you. And now the other problem is, we work very closely with a lot of these other protocols, SpookySwap, SpiritSwap, Beethoven, any of these guys. And we don't want to be seen as a competitor to any of them. And Solidly was also designed specifically not to be a competitor in that, and I can get into that later, that's a little bit more technical, but the way that if SpookySwap has their people provide liquidity into the Solidly system, they still get the fees. So, their AMM model can still look the same, which is nice because it means it's not competitive to these guys. It's complementary as a protocol to them. So we ended up coming up with this idea of, okay, so we can't just dump it into a pool and have people buy it. We can't do an auction. Any kind of distribution or airdrop means that we're adding our own bias in terms of how we're doing this, and it can be seen as competition. So instead, why don't we give these rights to all of the people in this ecosystem, that we're working with? And also a little bit tongue-in-cheek, and I apologize to any of these protocols, to also just make it their problem, because now all of a sudden we don't have to worry about it, they have to worry about it. So my apologies, but it is fun watching it play out. So the idea became, let's take the initial, just that initial vote, because that's all that really matters, is just where does the initial tokens being released go to, and to which pools do they incentivize? It doesn't matter what that pool is. If SpookySwap decides they're doing Spooky FTM, that's fine. If they decide, look, they want to instead emit it to Mumspell, also fine. It doesn't matter where they end up doing it. They can even fractionalize it and have Spooky holders vote on where it should go, because you can do fractionalized voting as well. So there's a lot of fun things that these protocols can do, but it ends up being additional access for them. It ends up being additional fees for them. And it also kind of democratizes, I want to say decentralizes, but it's not really decentralization. It's more like distribution, I guess, as in distributed system, not as in distributing the tokens. And making it, everyone's choice. So now all of these protocols can start interacting with it, and they can make the decisions, and they're getting these extra incentives on their protocol, and they're getting these extra fees. And another reason this was important is because this AMM is designed for protocols. It's not necessarily designed for traditional users or LPs. Traditional users and LPs can still use it, and they can still interact with it. But one thing we saw from Curve and Convex is that these AMMs are more important for protocols than they are for users. And another important thing, I've often built stuff like the fixed forex keeper thing as well, which is also a bunch of stable coins. Now they're sitting in curve pools, and keeper is doing a mission to add rewards onto those curve pools, but we're not getting any fees from any trades happening there or anything that's being facilitated in those curve pools. So, but if we could get that fee share somehow, all of a sudden it starts making a lot more sense for the protocol to do it. So this AMM is also designed with that in mind, that if you're the project that's adding the incentives onto your pool, so let's say you're a new project that launched, you now launch your pool 2 into the AMM, and you want people to swap and trade in there. But you also want to collect something for your own protocol. You want to be able to show, but hey, we're also getting fees from these trades. And that's a big thing. We saw that with the whole protocol-owned liquidity concept, where being able to generate fees from your treasury is an important thing. So that's already an added incentive for protocols to launch on this, because now they can actually capture those fees themselves while adding those incentives. Other than that, same rules apply. You start with your 40% boost up to 100% based on how much you have. So that same meta game still exists there, which does mean that protocols like Convex can still come into existence, but there's no whitelist. So one important thing about Curve is who is allowed to lock VE Curve is controlled by the DAO itself. So not anyone can. Any address can, but not any smart contract can. So eventually, Convex just got so much control that right now, why would they allow a competitor into the market? There's no whitelist in this new solution, so any competitor can come into the market. So what we'll probably see is, whoever's paying the newest, freshest token of the week is probably going to accumulate most of the protocol's incentives. And that's fine, because it adds another layer of a metagame there. But so you can emit the token itself onto any one of these pools. Now, another modification we added in there is how do we align that where you vote is where the best fees for the protocols is? Because now looking again at normal VE designs, you get the fees of the entire protocol irrespective of what you do. So you can lock your tokens for 4 years, sit back, you're going to get fees every week. You don't actually have to do anything. But we didn't want that. We want the system to self-optimize for fees, because if it self-optimizes for fees, the flywheel is going to keep spinning. So we just added one small modification in that you only get fees from pools you vote for. So now on a technical level, that means we don't have to track volume, we don't have to track fees, we don't have to do any of this stuff, because the voters will vote for the protocols that either give them the best bribes, give themselves the best rewards for their liquidity, thanks to their 40% to 100% boost, or where they get the most fees from. So naturally, they would be voting for the ones with the highest fees. And voting for the ones with the highest fees means the most incentives, means the most liquidity, means the best trade routes, which again means increased fees. And so it just keeps going through that cycle. So now it's designed for protocols, and it has a lot of benefit for them because they can claim the fees. And like we've been in the space a while, so there's been discrepancies we've seen. So for example, Uniswap V2, an absolute wonder of engineering, but they had what I call maintenance oracles. So you could use their time-weighted oracles, their TWAPs, but you needed to take a snapshot every amount of time, every epoch. So you need to manually record what that value is every 30 minutes, every 1 day, every etc. So I call that maintenance, because you have to do something the whole time. With V3, they added that you store it in a memory register, and you can read from that back as many slots as there are, and then you can get that without any maintenance, which is a nice change. But they're not saving the standard TWAP they did in V2. They're now doing a new weighted average, which I don't like, but again, that's a different story. So we added these zero maintenance TWAPs into these pools as well. So now, again, if you're a protocol and you're launching a new pool 2 into this thing, not only are you getting the fees, not only can you add these incentives easier, not only can you whitelist for the protocol to be able to accumulate your own weight, but you're also getting an integrated oracle. Now, another problem that I was having was often you want to do calculations based on the reserves available in these pairs, but there's no reserve flash loan. There's no proof mechanism against that. Am I still talking or am I dead? This thing looks busted.
Good.
No, you're good.
Oh, okay, awesome. Everything went dark, but if you guys can still hear me, then I'm just going to keep going. So we added the fact that these reserves are now also flash loan proof, which is an extra added value benefit there. And there's just so many little micro changes, like the other thing with normal staking rewards, you can only have one token per sort of reward contract. We managed to change that so you can have an infinite arbitrary amount of rewards that people can add on top of that. So now you don't have to create your own code to try and wrap an existing gauge or staking contract and then sort of sub-deposit it into there. You just add your token onto it, and then that's incentives for people. So projects can, incentivize their pool twos without needing to write any new code. They just add it into it. And it's actually designed so that these calculations don't even impact the LP deposits. So the LP deposits are never part of that calculation, which means it's also a lot safer for LPs from that perspective. Originally, that introduced a potential DDoS attack vector where you can just add, an infinite amount of tokens, and then that calculation would fry. But we managed to split that out.
Oh no, it was the black screen of death.
Yeah, it's a hard one. This one.
Now, Danny, correct me if I'm wrong. One of the most appealing things to me about the new VE33 model, of course, is the fact that you can kind of wrap these VE positions with NFTs, and they're represented by NFTs. But with Curve, it's my understanding, if I want to stake my Curve, I can't have different positions, that are locked in that VE model. I can take my position and whatever I want to lock, like let's say I'm good for a 2-year lock. All of my coins are going into that 2-year lock unless I'm splitting up addresses. Now, it's my understanding that this new VE system will actually allow me to come in and say, okay, I'm going to take, one tranche of my coins. I'm going to lock it up for 4 months. I'm going to take this next tranche and I'm going to lock it up for 1 year. This next tranche, I'm going to lock it up for 2 years. Is that correct, or have I misunderstood this?
So you're very flexible on how you want to lock, and that is a very cool thing. So you can create these NFTs a little bit like the UniV3 thing, right? All positions are different, but in reality, there is a different NFT of each one, and potentially you could sell that NFT if it were locked. Like imagine it like your UniV3 position, instead of being unlocked like it is now, that you can withdraw whatever you want and earn the fees. In this case, you have a V solid or V rock, because we're gonna alpha the name of the token. Then you can take this NFT, and the NFT represents your position and your lock time and your voting power. Like this, why this is so cool is because it allows a new layer of composability. And before we re-dive into this, I will give you some context of, for example, how we can use these NFTs. With Abracadabra, is quite some time that I don't talk about what we have been developing, but actually we have been developing quite a lot of new things and new features for Abracadabra V2 that are already in production. One of them is NFTs as collateral. So about like 3 months ago, I was talking with Merlin, and I was saying like, there is very likely a market that is an OTC market. And how the real world works is that hypothecs or loans are more non-fungible than fungible. So not everyone has the same conditions. Not everyone goes to different banks, different things. So you could imagine as your hypothec on your house more as an NFT, because the contract that you have with your bank is what matters. Like those are the conditions. One have one for 10 years, another have another for 20 years fixed rate, another have a flexible rate one for 3 years that then renews after, right? There is a lot of complexity into the real world finance that in reality needs to be translated into DeFi, because I'm a big proponent of DeFi more than being important for creating brand new things, is to replicate things that exist already with a focus on decentralization, so self-custody specifically, and access. Like, I don't think that we need to completely reinvent the financial world. We just need to bring the products that are already popular and important for everyone in the world and make sure that anyone can access them no matter what at certain conditions, and that the custody of such assets is completely decentralized and managed by a blockchain. So this is always our focus. Then we did say, and Sifu was like, oh, Daniel, like, I mean, I would like to be able to have like OTC markets in which I can tell to my friend that has a lot of CVX, for example, that he can borrow me CVX, and I can short it, or I can long anything. So I can figure out a way. You should figure out a way in which we can create this like peer-to-peer markets. And this reconnects with the idea of the NFTs. And I said, like, yeah, but if you're going to do this peer-to-peer markets, we need to think about what are the conditions. And like in the real world, like out here, everything is time based. Like so you take a loan, is time based. It's not based on like just your collateral. It's based also on the time that this loan has to be repaid. So with the concept of introducing the concept of time into a loan is something that is not really in DeFi right now, but we did it. And it's very important because it allows anyone to basically lend money to anything, right? So as long as the conditions are matched, so basically like an order book type of thing, then you can create any sort of market in which I would say, like, for example, I have CryptoPunk, and that CryptoPunk floor is, I don't know, 20 ETH. Then is there anyone out there willing to borrow me 10 ETH in exchange of these CryptoPunks if I get liquidated, that I don't pay in within like 3 months with a certain interest? So now with the new model, that the V33 model, what we introduce is that theoretically, even if you have a VROC token that is locked for 4 years, you can still generate a borrowing lending market with it, because the asset is there. You can add it to Abracadabra and request the loan, basically. At what condition, it all will depend on how we structure basically the UI to make it as simple as possible. But this is something we're working on right now. But the reality is that it really opens up liquidity into a protocol that really becomes 360 degrees complete, in my opinion. Like, one of the reasons, and you know very well, Messi and RT, one of the things that are important for people is capital efficiency. And as you mentioned, Andre, before, like locking for 4 years into like into this industry that DeFi doesn't even exist since 4 years, right? It's a very long bet. And being capable of still having access to capital while you're locked, and you get all your fees, and you get passive income, and so on, it's a game changer. Like, and this is like the power at the end of like the Frog Nation, right? And putting together all these projects and build new things with in mind everything else that we have in the ecosystem, and the power of composability, because then you really unlock full potential of these new projects to scale and allow people to take opportunities when they can, because they actually can take a loan or borrow or whatever, or sell this NFT and to somebody else that wants it, or get bribes and use it as collateral, and then with the degen box they still receive all their revenues and all the bribes, and they can still vote. you can imagine like the infinite is really, the universe is infinite, right? And I am, the most exciting thing about like working together with Andre is that like he is a fantastic builder, and he has, and a lot of builders in this industry are very good coders, but they don't have very good ideas. Like, and Andre is the one that has both great ideas and great skills, which is something that really, really blows my mind sometimes and makes it like really, like, we're very powerful thing. And with this new V33 design, we really elevate, in my opinion, token economics into the new era in which things work with efficient gas fees. Phantom is an amazing chain for this, because we can do a lot of other cool stuff, and really, really excites me, man.
So let me ask you guys, and I don't know if you are willing to say this, but what exactly, in terms of like with Curve, right? Curve V1 is for pegged assets. That's things that should trade 1-to-1. So then Curve V2 comes along. It's basically Curve, but for unpegged assets. That allows you to have, Spell versus Ethereum, for example. On this solid swap, now that we know the name, what are we actually going to be able to swap? Is it for pegged assets? Are you going to be able to have unpegged assets? Like what's going to be traded here?
Cool. I'll jump in. Both is the simplistic answer. So the standard AMM rules apply. X times Y greater or equal to K. That's traditional AMM. So that's more like Uniswap V2 or SushiSwap or any of these protocols. It's not going to be as efficient as Curve V2 or Uniswap V3. It does come with that capital efficiency trade-off, but it has all of the other benefits of the system. And then the main thing, the protocol was actually originally called StableSwap because we have this new curve X to the power of 3 times Y plus Y to the power of 3 times X, which gives you the same curve as curve. And I know there was a lot of times I used the word curve, but just curve.phi versus a mathematical curve. So you have both. You can swap between volatile assets or stable assets. When you create a pool, you decide if it's a stable or a volatile one. And everything else, works as normal. So you can still chain swaps as well. So you can go USDT, ETH, SDEF, whatever it is. So you can have multiple ops as well, which makes it a lot more efficient. But the AMM itself at its core is a combination of traditional XY and what we're calling X3Y plus Y3X, because it's nice and it's got the 3-3 in it as well, which is a little bit mimetic, which is just a fun trade. And sorry, just one thing to add on the VE where the 3-3 comes from. The 3-3 is this concept that stakers in the ecosystem need to be rewarded more than non-participants. And if everyone stakes, everyone's happy. So with that, there were 2 extra modifications we made onto the VE tokenomics. Number one is, so a current thing with emission-based systems, even if you stake, whether it be XSushi, whether it be VE Curve, whether it be Convex, it doesn't really matter. There's constant emission. There's constant new tokens being minted and introduced into the ecosystem. So you're always playing a game of catch-up. But the nice thing about all of these rebase tokens, whether it be Ohm or Time or etc., is it means you because you rebase while you're staking, you stop thinking of it in terms of price and trying to catch up, but you start thinking of it in terms of what's the percentage of the protocol I own. Because even if the circulating tokens double, if you owned 5% of it when it was half what it is now, and now it doubled, and you still own 5%, your position is still the same. The price might have halved, but your value net differential is still exactly where it is. So the other thing, and that's where the 3-3 comes in, is that stakers get proportionally rewarded equivalent to mints. So if there is 2% of tokens minted in this week, the VE33 lockers get that same 2% added to their system. So as a percentage, you're always owning the same amount of the protocol. And then the secondary part of that is we also want to decrease emissions based on circulating supply. So the more tokens that are locked up, the less tokens should be emitted, because now let's say 99% of tokens are locked up and there is only like 2 million tokens in circulation. Now you don't want to mint 20 million tokens because that's going to horribly ruin those few tokens that are in circulation. So instead, 99% is locked, so only 1% should be emitted of that 20 million. So you end up only getting 1% of that being released into the system. And these two extra mechanics play nicely with that whole 3-3 ethos that, the more people stake, the more people that do the long-term bet, the better it is for everyone in the protocol. But at the same time, it's designed so that even, when everyone isn't 3-3, the lockers still get the benefit because they will always proportionally grow. But anyway, so that's sort of the tokenomic side. And then as you asked on the protocol side, the big stuff there is the built-in TWAPs, the fee reclamation for projects, the new Y3 X3Y curve, in addition with the normal, XY curve, and then a few other things that are falling off of my brain right now because this has been a very long talk, and I think this is the most I've actually spoken in probably a year. But anyway.
Well, I think everyone on Twitter seems to be saying you're extremely well spoken, man. So you're doing a very good job. Go ahead, Danny.
I was saying that I think one of the biggest thing is the actual oracles built in. I think we have a big oracle, like lack of real good oracles around, and it's always a problem. Like the TWAP, it's sometimes inefficient in liquidations. Like unfortunately, we have witnessed like the liquidation cascades on time a few days ago, and the TWAP is not as good as it could be. And I think the current design that Andre implemented into the AMM, into SolidSwap, is so much nicer. And it also allows, for example, projects like Abracadabra to create leverage pairs out of the bet. So you can basically leverage stable farm instantly with that. So it's super fucking cool.
Okay, now as Andre said, look, we've been here a really long time. We want to be respectful of our guest time. They've already given us a lot, so I think this would be the perfect time to transition into a brief Q&A session. Now, I'm going to go over the rules for this really quick. There's a zero tolerance policy for trolls. These guys have been very generous with their time. If you come up to troll, you're just going to get booted immediately. Number two, you are going to be recorded, okay? So your voice will be on our YouTube, Spotify. If you do not consent to being recorded, do not request to speak. I'd say we'll give this 15, 20 minutes for questions. And I would like to keep the questions focused on the new Frog Nation product. I know you guys might have questions about KP3R or Wonderland or, Abracadabra or whatever, but, we're primarily here to discuss SolidSwap today. So please, be respectful of that. Also, one question per guest, and please don't get up here and ask like a 5-minute long question. And after your answer, go like, oh yeah, and like, we want to give as many people as possible a chance to speak within this period of time. So you will request to speak. I'll invite you up here. Please make sure you say like, hey, Andre, I've got a question for you, or hey, Danny, I've got a question for you. And they're welcome to bounce off of each other. RT is going to kind of host this section. So with that being said, I'm going to start adding speakers, and you guys can take it away.
Just one thing, Messi, if I may, like I will take the AMA because like Andre spoke for like an hour. Like I think that I can take any question in this side. Okay.
Okay. Well, I just sure. But anyway, I'm going to start inviting people up, and like I'm targeting like maybe 20 minutes, but of course you guys, if you want to stay longer, you can. But that's like the rough, kind of estimate of when we're going to cut it off, just because we want to give people a chance to ask about this SolidSwap. And I know probably SolidSwap does integrate with a lot of other Frog Nation products too. So, anything like that is fair game as well. Anyway, inviting people up now.
Hi.
All right, let's get started.
Oh, sorry.
Yeah, if you guys are, if you've been invited on stage, if you could just mute yourself, and I will invite you up one by one, just so we can keep a nice flow. I see Dennis, you are up here. Would you like to ask a question?
Yeah, my question is regarding the airdrop, a very unique way of doing it. But so far, I see 19 of the 20 top protocols have not announced any plans on how they intend to use the airdrop. And the only one who has been purpose created in order to take advantage of the airdrop. So I was wondering if you guys think this is a success, if you hope that they would do things differently, or just general commentary on how the protocols are handling the airdrop. Thank you.
I think that the situation is that we haven't given so much information on exactly how much we are airdropping to who, right? So it's fair game that some protocols are like, I don't know if I'm going to get even the airdrop, what is going to be, is it going to be valuable or not? And some are planning to use their resources. In my opinion, like in my personal situation is that I'm reaching out to some of them myself because I'm interested with Abracadabra and Wonderland to buy some of those, right? There is going to be like a listing of those NFTs that is going to be on open auction. So each individual protocol is going to be deciding a little bit what they're going to do with their airdrop. But in terms of like coordination, we are trying not to influence such thing. Like we want it to be as open as possible.
For sure. And that's a really good question. And it's fair. It's a little early in the process. So I expect we might hear from them in the coming days and weeks. Let's see. We've got Jean Best Wick. Come on up. You are on mute, sir, so you may have to unmute yourself. And I also may have just butchered your name, so you didn't even hear me. Janbest. Welcome to Frog Radio. You are on. All right, we're going to move on to OX Crosby with the Mutant Ape. Come on down.
What's going on, guys? Appreciate everything everybody on this radio has done for the space. Just wanted to verify one question. I'm pretty sure you guys have already done this, but wanted to double check it, which is like, given a bunch of us are farmers and yield farmers in this on the Phantom ecosystem, if we have a lot of our TVL locked in the Spirit Swap or Liquid Driver or Phantom, that'll still qualify for the airdrop. Is that accurate?
So yeah, I'm happy to field that one. Like we can't really answer that because that's up to the protocol. If you're asking, can Spooky Swap or Spirit Swap decide to incentivize that and allow you to receive some of the emission? Yes, they can. Will they? Up to them.
Gotcha. Okay, so is this essentially like if, let's just say 100% of your tokens happen on Phantom Chain, happen to be locked into, paired up and staked, then there is a chance that you would not be eligible for airdrop should those protocols choose not to, spread that wealth back to the stakers.
Yeah, that's it's a possibility, but I mean, realistically speaking, most of them won't just because of the backlash. So, like, it's part of the experiment to see what happens, but I'm quite confident that they will distribute it to their, whatever they consider to be their most loyal segment.
So I love the experiment of it. And the way you broke it down for us today, Andre, and your process in deciding how to distribute, it's not an easy problem to solve. And I'm here with the popcorn to see how it all goes down. And next up, we have Chloe. Welcome to Frog Radio. You can ask a question here, Chloe Ping. You are on mute, though. You'll have to unmute.
Hey, good evening or good day, good morning, wherever you are. Thank you very much for this hosting this fantastic knowledge. My question will be, I'm curious regarding the airdrops. Andre tweeted saying the top 20 TVL. So my question would be, do you have a time period? Because some of the projects are there longer, they have accumulated, and some are there shorter, and they also on the list. So can you please talk a little bit about that? Thank you.
Yeah. So it's funny because it's the when airdrop whole question. So we are looking at first of all, like Andre and the team and everybody is looking at the most security possible on when to launch, right? So we yet don't want to give a timeline on when, but it's gonna be soon TM. Like what I think, what I can tell you what I think is gonna happen. Like so these projects are gonna get their allocation, and I think some smaller projects are gonna list their NFT for sale, and they're gonna raise money from it. And I think they will ask the community to vote for it. And I think it's great because that's the spirit of the Frog Nation. Like when we said like how we're gonna distribute it, and then you will see one of the things that we wanted is to also allow the smaller projects to raise some capital and have some money there. Instead of us raising all the money, we can kind of let the smaller projects grow and get some return out of what we have given them as of the tokens that we give, right? So it's really like a frog thing. Other projects instead that are a little bit bigger and maybe don't have the requirements of capital to keep innovating or keeping their bills and stuff like that, then they're gonna start voting, in my opinion, for things that are beneficial for them, right? So well, much likely, for example, Abracadabra, how it's going to unfold is that Abracadabra, if it's in the top 20 still, which I think it's going to be, is going to vote for Magic Internet Money pairs, right? And it's going to go out hunting for like who is going to get bribed for pushing our Magic Internet Money pairs. And other protocols like Spooky, for example, it's very likely to just decide to get bribed because they have their token and they want to give it to XBOO, very likely as an additional yield for XBOO. Then we will have Geist instead that is going to want to use their own token for allocating to the A token, so the Geist token, rebase tokens pairs. So they and in this we have the cross reference. Like if Geist have Magic Internet Money, then we can kind of go together, and push certain pairs together. So that's why I want to reach out to them, and I will do that tomorrow actually. And these are very interesting, like dynamics that play out into this type of airdrop. Like we wanted to show everyone that the Frog Nation is a very inclusive and really cares about ecosystems in which we invest in. Now we are very much invested into making Phantom a success, and we want to reward the protocols that have been suffering or have been like, there hasn't been like a easy time for the Phantom ecosystem, to be honest. Like there wasn't a lot of VC money buying their bags or pumping their bags or holding stuff. They have been diluted quite a lot. It has passed a lot of time. Like I have Phantom in my radar from the early beginning. We have been deploying the first successful token on Phantom back in the day last year. And this is really like a moment of truth for the Frog Nation, because we come back home and we come back with gifts and we come back with power and we come back with a lot of stuff that is happening. We come back with sushi. There's going to be a lot of cool shit coming from the sushi side that like it's really amazing. We have Solid Swap with the Rock token, with the new economics. We have the new pairs that are coming, I think tonight or tomorrow, on Abracadabra with new collaterals and XBOO, new FTM, ICE, and the very cool stuff. So we want really to support the ecosystem. And then we have some other super insane stuff that is happening of Magic Internet Money and centralized exchange listing with Phantom. So alpha here. So very cool shit going to happen, and I think really this airdrop kickstarts the new season for Phantom. That's my feeling.
Oh, that's beautiful. Thank you so much, Daniela. Daniela. Yeah. So as you mentioned, we are frogs. We are a frog nation, and we want to do things that empower people, especially the people who really needed help. And also we love Phantom. So I want to say is that I think the project that really is doing good for the people and making meaning and being innovative and wants to do good for both Phantom and the Frog should be considered more. And yes, so I'm very bullish on both the Frog
Thank
Nation
you.
and Phantom. Thank you.
Let's go.
Yeah, thank you so much, Chloe, for joining us. For anybody who came here to find a simple answer to how the solid token will be distributed, well, it's gone from 1 airdrop to 20, each probably with their own rules, some as LBPs or sales, some rewarded to TVL. I'm looking forward to see how it all shakes out, and some just holding on for dear life and getting bribes. You don't get an easy answer on this one. Next up, we have on Crypto Break, CR Millionaire Investor. Join us. Morning.
Hi, Andre. Hi, Danielle. I just have one quick question. I don't know if it's a dumb question. Pardon me for that if it is. I just want to ask, what is there for the FTM holders who are locking their staking their tokens for a long time now?
Yeah, this is a so I don't know if you follow a little bit of Wonderland, but we recently closed the acquisition of a staking company. So this staking company is going to deploy Wonderland staked Avalanche first, but as soon as this is deployed, we're going to also work on deploying Wonderland staked FTM. So we will become validators on the FTM network as much as on the Avalanche network with our own assets. And we're going to allow people to liquid stake through Wonderland. And of course, the benefit is that it's going to be taken as collateral from Abracadabra, and you will be able to be very efficient on your long-term position as a staked FTM.
Wow. Thank you so much. I'm so happy for that.
Me too. It's a long time due. I don't know if you guys remember that they talked about this forever. Like, this is finally, like, really coming.
Absolutely. Now we've got Robert Cow, NFT Frog. Frog, come on up.
Greetings to the leaders of Frog Nation. Probably my question is to Daniel. Daniel, we know that Wonderland is a hedge fund, an investment DAO. So how Wonderland is going to invest in Andres' project in Solid?
Well, as you know, like the same way that these guys did with the V token, we could actually replicate the VDAO or whatever it is, but we're not going to do it. Like we are out hunting to bid the NFTs that are out there, right? The ones that are for sale. So reaching out to the projects that are maybe smaller, that require capital, and maybe do deals in that sense. So maybe we're going to invest some in their token, some in their NFT, you know. And this is how we're going to play it. Additionally, we have quite some capital ready to deploy. I don't know if you look at our treasury, we have 180 million in stables that have not been deployed yet. One part of that is going to go into the new Frax 3 pool leverage farming, which should give us around the 7x leverage, and about like I was looking at 98% APY, and the rest is going to be deployed as TVL on Solid Swap to make sure that the project has TVL from the beginning and has depth into the correct pairs, the mean pairs. And as soon as that happens, we are going to test it out and prepare the cauldrons with the new oracles that Andre designed and create leverage farming for everything. It's going to be fucking nuts.
Ooh.
This is pure art.
Okay, great question, Robert. Thank you for that. Next up, we've got Chainsight Analytics with a question.
Yeah, I was wondering if Andre could talk a bit more about the Keeper tokens foreign exchange decentralized on-ramps.
Yeah, I can talk a little bit about that. So fixed forex is currently Popsicle is under development for the fixed forex pairs on Uniswap v3. As soon as Tridentos is going to deploy, it's going to be a focus because, of course, the Sushi Swap is part of the Frog Nation. So we're going to transition that there. And as this develops, we can create a much more concentrated liquidity, better fees for everyone, and especially with meme pairs, we can create the leverage farming on it. So it's gonna be pretty awesome. Just takes a little bit of time. This whole stuff is very, very like complex tech. So, and especially with my experience of what happened with Popsicle that I repaid myself, I would like to avoid to lose another 25 or more millions because, as you know, guys, I always put myself in the front. So this is just why some of this like advanced tech takes time to be developed. And there is also research part that needs to be taken in account, like on how to optimize and so on. So, yeah.
The days crawl, the weeks fly, and in a couple of years, we're going to look back and be like, remember when this was all new and everything wasn't just an instant cross-chain swap? Looks like Andre may have dropped off the call, so just for future reference, guys, Danny's going to be taking up the rest of our Q&A, and it looks like we're down to our last four speakers here. Of course, Messi, correct me if I'm wrong. Andrew Fisher.eth, you're up next. Oh, and Andre's back. Speak of the devil. Great to have you. All right, Andrew Fisher, you're up. If you can hear me, you're on mute, though. You will need to unmute. Okay, Andrew might have stepped away for a sec. Anuj, come on over.
Hey, namaste from India, Frog Nation. This is Anuj. I'm working with WazirX acquired by Binance. So my question is regarding staking. So now we see that even Ethereum is thinking to switch to staking. So do you think that layer one project like Avalanche and Phantom are making pressurizing Buterin to switch to staking? The first question is this, and the second one is on liquidity. I was listening to in the first half you said that most of the people are earning APR because these new protocols they want liquidity. So I see that. What about the staking and for the nodes that are allowing, or validator nodes, I would say, that allowing all the transactions. So would you bit explain, like when you say that all the APR they are getting is because of only liquidity, what about validators? And the third one is on looks rare one that is like I'm asking too much. The looks rare ones, they are giving APR up to 800%. Do you believe in such unrealistic APRs, or is this just a marketing strategy? What's your take on this?
So when I said before that Wonderland is going out hunting for buying the NFTs of the Rock Solid swap, the reason why it's doing it is because as we are developing liquid staking, liquid staking for Phantom, one of the best use cases for solid swap is exactly like doing swaps in between liquid staking and non-liquid. So liquid staking and normal Phantom. So Wonderland staked Phantom, and that's the reason why we are buying this. We are interested. Of course, there is a speculation aspect because I'm fucking bullish on everything that we do, and I will always be, the largest bag holder of all of our shit. But at the same time, there is also the part that, like, I think that for long-term sustainability, we want to accumulate these tokens for specifically create this deep liquidity on staked Phantom, staked AVAX, and so on. So for the APR, I don't even know what projects you're talking about, dude. I'm sorry. Like, I mean, it can be, it cannot be. I don't know.
We're asking the lead dev of Wonderland if he thinks 800 APY is out of hand. I don't think
that's low.
Like,
I feel like it's low. But he said APR, though. Like, he said APR.
True.
So 800% APR is some really, like, it's possible. I mean,
Guys, I wanted to remind everyone, look, when you come up here, please limit your questions to one question. Thank you.
All right, Anuj, you got away with one there. Jaded Mandarin, come on in.
Hey, thanks for ruining my morning, guys. I was going to do a bunch of stuff, and then I saw the space, and of course I had to drop everything. So thank you so much for doing this. This is fantastic. Quick question. There are two small questions, but they're related, I promise. Can you talk about the VE DAO? I know it's not an official endorsement in any way, but that, unlike all the other projects which were kind of established, this kind of came out of nowhere, and would just love some, security that this team behind it is at least known in the space. I assume so if, Andre, you are promoting it. And secondly, man, Danny, you are on fire with, 400 projects you're working on. With sushi coming around the corner, do you see integrations between this project and sushi in particular, or with the new VC model of Wonderland being more directly investing in this VE project? Are there direct connections there? Thanks, guys. Appreciate your time.
So, Andre, I don't know these VDAO guys, so maybe I'll let you respond on that.
Yeah, sure. So VDAO, I have mixed feelings on them, but they're playing by the rules we set out. We said that the top 20 protocols are going to receive an NFT. VEDAO launched, I believe it was yesterday, less than 24 hours ago, with the sole purpose of collecting enough TVL so that they can be in the top 20 list, so that they can get an NFT, and their token works as a fractionalized version of the NFT, so you can vote with it, etc. They launched, let me actually have a look so I can be a little bit more accurate. As of right now, they have $1.03 billion in TVL. They're currently number 3 on the list. So the reason there's mixed feelings is because they're technically speaking not a thing. They took the MasterChef contract, which was smart because everyone knows it's safe and they can deposit into it. They told people, look, you deposit into this, they're going to fully emit their token over, I think it's the next 4 days or 5 days. It was 1 day up until after the lockup. So they have an insanely high rate that they're currently emitting. And their whole purpose was to attract all of this TVL to gain access to the token. So, on the one hand, respect, they're playing the game. It was a bunch of smart moves. On the other hand, there's obviously bad reception because, they're not one of the sort of long-term contributing protocols. I'm excited to see it, because this was sort of part of the rules we stipulated. They're playing within those rules and they're gaming that. So I've got no issues with them. I would like to see them evolve into something more than what they are, because, currently they're just a fractionalized wrapper. But we'll see what happens.
Yeah. So about sushi, actually, I take a little bit of time here for some updates. So first of all, I have mentioned before that I think SushiSwap should start to focus more on volumes and user acquisition rather than TVL. And in the proposal that we did during the request for the restructuring of SushiSwap, we have highlighted this quite a lot. And I think that SolidSwap and Sushi are very complementary, because my vision for SushiSwap is one that we are going to focus on creating a full centralized exchange experience on a decentralized exchange on Phantom. So I don't know if this was very public or not, but now it is. And that is very different than an AMM. Second, there is Trident, that is concentrated liquidity, and it's very different product. So it's also then something that doesn't really compete, in my opinion, as also Andre mentioned. And third, I think that the future of SushiSwap is actually becoming an aggregator. So one of the things that I'm most focused on is how do you acquire the flow? So how do we acquire the trading volume? And I think that SushiSwap has the opportunity as a brand to become the best aggregator in the world, so the best trading interface, which also will include SolidSwap in the case in which the quoted amount or the quoted price for a stable swap or whatever, or any type of swap, it's better. And at the same time, the way that the rewards will be distributed will transition very likely to a model in which we buy the flow. So we have a list on the back end that we can use, and I've been reaching out to different data analysis companies, and we want to reward specifically certain addresses that we believe that are valuable potential users long term, and we want to buy their flow, so we want to buy the best execution. And even if SushiSwap cannot provide such execution, we can still compensate that and acquire these users for our platform, and still route any other users that, or bot or whatever, to other platforms. So I think this answers your question. Like, it's very much different the way that I see the puzzle on longer term, right?
Excellent. Thanks for that, guys. The first time I've heard of VDAO, it just goes to show you just can't win with distribution. There's going to be someone somewhere who finds a way to capture an edge, and that is the beauty of the free market. Excited to see how all that plays out. We've got Yodo coming up next. Looks like the final question of the day.
Yeah.
Possibly one more.
Hey guys, how are you doing, everyone? Daniel, congratulations about this year, because I follow you since the beginning, since Pop Cycle. I was there for your first Twitch. And Andre, thank you for responding most of my question on Telegram. So my question is more about basically the liquidity on Phantom, because you decided to let SolidSwap on Phantom. And I've known to be a guy that onboard a lot of people, and there's always this problem about, there's not enough liquidity to get actually this native Phantom and use the chain. So my question is, is SolidSwap going to play a role in this liquidity problem that Phantom has?
Yeah, I think so. Like the important part is that we need to create projects that align incentives and are valuable and are innovative. Like Wonderland in this is like a centerpiece of the liquidity problem. Like we commit to push forward the value, so we are committing to also bring TVL and liquidity in the pairs that matters, especially for this launch. So you can expect that this is at the top priority for me. Like the reason why Abracadabra now is extending functionality is that by accepting Sushi LP tokens as collateral, we want to make it super easy for Popsicle to leverage such liquidity positions, and with the constant product, that is something that is launching very soon, and with limit orders and all of this, the experience will be of very deep liquidity on Phantom as soon as in weeks rather than months.
Yeah.
So this is really...
Yeah, Daniel, I'm sorry to cut you out. What I was meaning is actually, bringing Phantom to actually the Phantom chain, for people to use the Phantom chain. Because, we always hear about, Binance, cutting the bridge to bringing Phantom to actually use the chain. So I don't know if, like, SolidSwap can play, or if you have planned actually to make it more available for people to onboard into Phantom.
Yeah, there is something coming out soon that you will see that will make this much easier. Like, yeah, I can't tell you. I'm sorry, as this is under like real strict what is going on.
You've reached yeah. Look, guys, that wraps up this segment of the show. From the looks of it, Crypto Messiah has stopped inviting people up, which is our signal that we are nearing the end of the show. Absolute pleasure having you on again today, Danny, as ever. Our Frog King coming back onto Frog Radio, where you belong, to kick off the year together. And Andre off into the mist, I think, after another disconnect.
Yeah, he broke his phone completely dead.
Andre
he just broke.
Yeah, he just threw it at the wall.
He's
So
got
I
those
think,
Android problems, you know.
yeah, that's it for us today, guys. I will actually be live a couple hours from now on Hero Labs, HXRO Labs on YouTube. If you guys want to do more of a market commentary walkthrough, Crypto Messiah and I often go on there each week on Wednesdays. And we will be back with our lineup next week on Frog Radio. Each week, the time changes a little bit, pending on our guests' schedules. Often they are project founders and that they're very busy, so we try to work with them. So just keep an eye on our Twitter, which is _Frog Radio.
And guys, we've actually lined up our guests for next week. We're really excited. We're going to have people from GMX Perpetual Swap on, and that's going to be on next Thursday, our usual time. We will announce like the time and you know, of course they'll get custom frogs and all that in the coming days. So, you know, as RT said, keep your eyes on our Twitter for that. I think it's going to be a really good episode. Danny, Andre, I know you're not here. Guys, this was like an incredible episode. I really enjoyed the constructive conversations. For everyone that did ask a question, your questions were fantastic. Thank you so much for you know, allowing us to learn from these giants of the industry. Danny, do you have any concluding thoughts, or you know, anything else you want to talk about? Any alpha you want to spill? Take it away, bro.
I think that is pretty much it. We have a lot of things going on, so I'm very excited as usual. The time seems to pass much slower in crypto, you know, but so everybody's always when. We're running. I'm working over hours as usual to make everybody get what they are supposed to get, and I'm really looking forward to this season to kick off. And this market is a bit rocking. Correlation is what it is, but we will keep delivering. Everybody, we didn't like. Important to know is that like I'm not in for the money or anything like this. Like I'm in for creating products that you will want to use for a long time. And this is the philosophy that we have at the Frog Nation. Like we want to create products for the people to use, and we will keep advancing this industry. And now with the addition of Andre also in the team and all of this that we're going to do, it's going to be even better. So expect a lot more things coming. Thank you.
Absolutely.
Yeah,
and 2022 can crab and bear all at once. I don't imagine it'll last throughout, but let's see. The builder's going to build, and at the rate you're building right now, we're going to have you on hopefully at least once a month to just catch up to everything and keep everyone posted. I know the frogs love hearing you here on Frog Radio.
All right, guys. So that's all we have today. You know, Danny, Andre, although you're not here, you guys are literally like a match made in heaven. So I'm really excited to see, you know, what's next from you guys. Following closely. For our listeners, thank you so much for being here. And until next Thursday, we'll see you all next time. Adios.
Take care.